All right. We are early and live. Let's get the chat set up. Let's get streaming into the group. Everyone can chat. Everyone can comment. Hopefully everyone can hear me. Let's see. Let's see. Turn off notifications. A lot of moving parts to get these things up and running. Ed, what's up, man? Good to see you. Thanks for chiming in, letting me know you can hear me, see me. Just me and you, buddy. Look at us getting here early. Let me cue up my slide deck. Let's let the team know we are live. It's like a well-oiled machine getting this all up and running. Quick and efficient. All right, let's just give it one more minute as folks trickle in. Excuse me. We'll give time to those that are over on Facebook to find their way into the Zoom. I can also go back over there, make sure they have the link that they need. Oh man, Evan beat me to it. My man. Awesome job, buddy. Link is there. So if you're watching us over on Facebook, click the link, come into the Zoom, join us here. Help direct the dialogue, ask questions, engage. That's the beauty of doing these things live. If you happen to be here live, is you get to take advantage and you can ask questions and engage with us in real time. Good thing I got my water ready to go. Okay, so as promised today, we're going to jump into a slide deck that I've spoken from in the past. The idea is to talk about a deal, dissecting a forced appreciation, like value add rehab style project, these add levels additions. Excuse me, and this one's not a new construction, but those are what we often talk about on these calls, right? Like not sourcing your typical cosmetic rehabs, not the lipstick stuff, not the wholesale stuff, but like sourcing a project where you're going to force appreciation by adding a ton of square footage, in turn, juicing up the value, baking in a really fat spread for yourself. That's our model. That's what we teach. That's what we advocate for. And that's what I'm going to show you today. If you've been here before, you may be familiar with this deal. It's very indicative of the types of deals that we do, that our students do. And that's why we use it. That's why we use this as an example, but we've done others in the past as well. And so that's what I'm going to share with you guys. So let me jump into a screen share as everybody settles in. Drop a comment over in the chat. The chat's open. Let me know you're here. Let me know where you're checking in from. And if you've done any deals, if you've got any wins, share those, right? Anything recent. If you've locked up a contract on something, if you've exited a deal, drop some comments in the chat as I get the slide deck queued up. Right, we're ready to roll. So let's see, make sure the chat is still up. So I'm screen sharing. So let me know if you're seeing my screen as I queue up the presentation. And I'll make sure I keep the chat up as well. Awesome. Alice, John, Jose, good to see you guys. All right, let's jump in. And so I know for sure that one or two of you know this deal. So this is great, right? I see John and Jose. Pretty sure you guys have seen this deal before. So let's just quickly run through it. Feel free to engage. We have like a more intimate group today. Like that's the beauty of doing these live, is you guys can comment as we go in the chat. I can manage the chat, monitor the chat, and be engaging with you in real time, right? That's not really doable when we have 30 people on here, but when we have 10, it is. So excited to jump in. Okay, so we're going to talk about where we find the deal, this deal in particular, and others, right? Like how do we source the deals? How do we fund the deals? And then how do we fix the deals, right? Managing the renovation process. But I want to focus primarily on the first two. And so, okay, what's the deal? Here's our typical forced appreciation style Cape ranch, like that you would source the canvas property on the left. And then here's what you're turning it into on the right. So think you're not bidding on what you're looking at, right? That Cape, oversized Cape with the 2-car attached garage, that's not what you're buying, right? The seller might think so, or if it's listed, the agent might think so, but what you're buying is a canvas that you can ultimately paint on and create what you see on the right, which is more than 2 times the original house, right? This is forced appreciation in action. This is creating square footage and being compensated accordingly for every square foot you build. If it costs you $150 a foot to build and you're selling for $350 a foot, then you're going to net $200 per square foot, right? That's pretty straightforward math. And that's what we love about the forced appreciation model and why we advocate for it. And so thinking about how you source these deals, organic versus paid marketing. You guys have heard me talk about organic marketing efforts in the past. That's anything that you trade time for, right? You don't necessarily have to pay to go to events. You don't have to pay to go speak on a podcast, right? Some do charge, but that's not what you really like. You're committing your time, you're exchanging your time for exposure. And so that's what we talk about, like meetups, networking, anytime you can speak, any podcast you can get on, any audience that you can get in front of. That's what you want to be doing and be telling people always and ever what you're up to, what it is that you do and what your buy box looks like, because that's how deals like this one will find you. And this one in particular came to us. If you recognize the caveman off to the right, that's a Homevestors logo, right? Homevestors is a big national wholesaling franchise. And so Homevestors, a Homevestors franchisee, brought us this deal as a direct result of the things you're looking at here, of organic outreach, of me posting, me attending RIAs, me talking to people, shaking hands, saying, hey, I buy dated capes, ranches, and bungalows in the better half of Union County, New Jersey. And that's exactly what he brought me. And that's exactly where it was. And we did exactly that. We bought it. So where else can you find these opportunities? Where else can you lean in on organic marketing? We already said local RIAs. You can connect with professional service providers, attorneys, architects, engineers, brokers, of course, and agents in the market. Like a lot of good seasoned agents will already be working with a builder or an investor, but not all will, right? So you can get in front of some of those agents and say, hey, here's who I am, here's what I buy, here's where I buy, and I'm active, right? And I'm looking to source new deals. Do you have anything? And then again, always and ever be just beating the drum, like the I am an investor drum. Everyone who will listen, you tell them, like, I am a real estate investor. I buy, fix, and flip capes and ranches in the better half of Union County, anywhere in the 350 to 450 range on the purchase side, ultimately selling in the 800 to 900 range, right? You got to be very certain in your language, because with that certainty comes influence. And if you can be certain about what it is that you're a buyer of and what you're looking for, then you can influence others to bring you those opportunities. And that's exactly what we did here with this example. And now let's transition. Again, we're focusing just on organic there, right? Drop me some comments. Let me know if you've got some ideas on how you might do that in your market. I know some of you are in our market. Jose, John, I know you're Ed, I know you're close. Alice, I know you're in Florida. I see a bunch of Omar, you're in Vegas, right? Like, so tell us, in the comments what you could do organically to generate lead flow. How can you fill your pipeline organically, given these examples, these things that I'm showing you here? Be creative, right? Be thinking about my market, my unique set of skills, my personality and makeup. What can I do that will organically generate me some inbound lead flow? So use this list as to drive your thought process around this, and then drop some in the comments. And hey, Joe, what would you do, right? Like, I know you might be just chiming in now, but in Rhode Island, in your market, what are some good opportunities for you to generate some organic lead flow? Oh, Omar runs his own RIA. That's brilliant. Like, if you can't join a group, create a group. It sounds like you're already part of a group. Joe, Facebook, 100%, number one here, right? Local Facebook groups. We've sourced so many opportunities outside of directly from local Facebook groups. This is what I love about being able to do this with you guys in like with this more intimate group, is we can engage like this. So again, encouraging you to be thinking, hey, what can I do in my market to generate organic lead flow? And if you guys have a budget to market, do that in parallel as well, right? We're not saying be solely dependent on organic. Organic is just where everybody starts, because if you don't have a budget, you don't need one. You're just trading your time for opportunity. But if you've got a budget as well, and you want to layer on a postcard campaign or a cold call campaign with some VAs, right? Whatever the case is, do that as well. Jose, divorce court. Yeah, divorce attorneys have brought us some great opportunities. Driving for dollars, Alice, of course, you know we love driving for dollars. And we're going to transition into the funding piece right now. So great timing on that comment. And so here's where we talk about the marriage of private and hard money to fund those deals. And I'm going to run you through this deal, which happens to be like a relatively large deal for most markets. It's not the biggest deal we've ever done. It's not the biggest deal maybe in your market, but it's a big enough deal where you need to marry private and hard money to get it done. And I'll show you how we did it. So first, let's start with what all are you even presenting, right? We've talked about the private money management system. You guys have seen this before, and it's got 3 parts to it. I want to focus on the opportunity part, acquiring private money lenders and communicating with them. The other 2 parts are for a different call. We clearly won't have time to get into that today, but we can talk about the opportunity, right? How are you positioning this in front of your private money lenders and your hard money lenders in a way that makes it inviting to them? Right? If it's a desperation plea for money, nobody wants to lend to that, right? People are going to be suspicious. They're going to be skeptical. What you have to do is position it as an opportunity for them to generate outsized returns. Right now, the market is doing 4.5% in treasuries. S&P is 7%, whatever the numbers are. At the time of this video, like, you got to be able to do better than that. And you have to tell them why you can do better than that. And what that basically comes down to is casting a narrative and painting a picture that they can get behind. And that's what all this is. That's what you guys are looking at here. That's how we do that with the use of some reporting tools, preparing a good slide deck, having a really solid doc package. So when they do express interest, you can formalize the agreement, right? It doesn't look like you're shooting from the hip or like it's your first time ever doing this. And so first and foremost, what's that all include? Well, a really clean, simple investment summary that doesn't overwhelm people, right? That's the first part. That's the simplest thing to open with. It's essentially, it's a 1-pager, right? It's this page in the middle with some imagery on both sides. A cover page, a 1-pager with the numbers, the stuff that's of interest to the investor, and then some images so they could start to kind of like visually see what you intend to do there. And these are the numbers on that deal. These numbers ultimately wound up being much better than this. This is how the deal was originally modeled. And this is how we went out and raised private monies for our gap, for our down payment on that deal. And so that's what you're looking at here. In parallel, providing them with a comps report, something to give them some confidence that you understand the market, that you went out and you looked at the comps and that you ran comps, and that you understand, hey, like, here's what we're going to build. Here's what this is trading for in this market. Here's how many days on market we're anticipating based on the comps, based on the data, right? This is all really good for credibility and for confidence, like getting the lender comfortable, confident. And so here we would have put, and that's what this 5 represents, right? We would have put 5 different comps to support our ARV. This was our original ARV, by the way. And then also going back, getting the appraisal to justify the ARV, right? Modeling at 995, 950 after repair value, getting an ARV appraisal, an after repair value appraisal of 995, further supporting our proposal, our presentation to the lender. Like, hey, we're going to buy this at 460. We're going to sell this at 950 or better. Here's a third-party appraisal that says when it's done, it's going to be worth 995, right? And here's how we help create that appraisal. Here's what we contributed to the appraisal on the left to ensure that the appraiser understands what we're going to create and gives us that valuation that we need to get the loan, but to also make this presentation appealing to lenders. And here's the term sheet that came back, right? I'm making sure that you all can see this. So this is the term sheet that our hard money lender came back to us with on the deal after the appraisal. So we've already got a private money lender secured. They're ready to commit the down payment, which here it looks like 103,000 plus any additional closing costs, which came out to this 17,000 in points, plus other fees, attorney fees, commitment fees. And so maybe this was 25,000 on top of this 103,000. So maybe we come to closing with something like 135,000, 132, something like that. And we may have the HUD in this slide deck. And if we do, you guys will see exactly what we brought to closing. So if you're following along, we're buying for 460. Our appraised ARV is 995. We've raised private money to the tune of 130,000 or so. And now we've raised the balance of the purchase and the construction money from a hard money lender. That's what you're looking at. So be thinking about this story arc, right? Because this is the way this deal is done. This is the way these deals are typically done. And you want to be able to like understand that if you haven't done this before. So that way you can paint this picture for the lenders, right? Any other issues or any questions or concerns around the funding piece, drop them in the chat as we go. I want to make sure, because I can circle back, I can show you those forms and these docs again if you need to see this to get a better handle on it. Again, I just want to paint the story arc for you guys. Like, we're sourcing private money. That's our skin in the game. That's of the 460 that this is being sold to us at. We need to come up with roughly 130 or so. We're needing to curate some sort of a report, a package that's appealing, that's going to get a private money lender comfortable, get them to lend us that 130 or so that we're going to then use as our down payment to go and source the balance from a hard money lender. And that's what you're looking at. You're looking at this entire like picture painted here. Now let's talk about this project coming to life. So what we ultimately did after everything you've just seen, after sourcing private money, sourcing hard money, getting that ARV appraisal where we needed it, what we ultimately decided to do, because the market was so strong and we had some comps at over $1 million in the 1.3 range just up the street, is we decided to change the scope on this project. And that's what you're looking at in red here. You're looking at an addition that we put on the back of the house on top of the addition we were going to put above the house. So we did an add a level and we did a rear addition. This is where we changed the game. This is where we added more square footage than originally intended, increasing our ARV. So that 995 number went north of 1.2 because we added more square footage than we intended. And we did that. Of course, we had to spend more to do it, and we had to go source that money later elsewhere, but it was worth it because the comps justified it. We saw 1.3 as attainable and we went for it, and we were rewarded for doing so. And I'll keep jumping and showing you. I'll continue to flow through this. I want to, again, think of this as a story arc, right? This entire deal, we're taking you through this entire process. Follow along this arc and you'll understand how you source the deal, fund the deal, manage the project, ultimately selling and getting compensated for doing so. Question from Joe: is it hard to get a permit for the additional square footage? So the answer is no, it's not, so long as you stay within the allotted zoning, the setbacks, like what the town allows for, right? There's going to be regulations, there's going to be zoning, there's going to be planning board, there's going to be rules, right? Like what you can or cannot build on this lot based on the zoning. Well, as long as you stay within those setbacks, within that rule set, then no, it's not hard. It just takes a few weeks for the town to review the plans that you submit and to give you the approval for the additional square footage. And if you guys can see here, there's this sloped roof to the right. And the second floor, this is a little bit in the weeds, but I think this will be helpful for those of you that understand zoning and setbacks. So the regulations on the right dictate that you need to be 15 feet from the property line. Well, on the right, this house was, say, 12 feet from the property line. So what you're looking at, and it's just this slight recess in on the second floor, that second floor is pushed in just a little bit. That, to Joe's point, is to make sure that we are conforming to the setbacks, to the zoning on this particular parcel. So we have to be 15 feet from the neighbor's property line. Well, the original house is 12 feet. That's grandfathered in and that stays as is. But the second floor that we added, that's considered new construction. And so that had to be shifted in a foot or two. And that's what you're looking at here, right? And so to the untrained eye, there's nothing there that doesn't look like anything, but a good architect will draw this in such a way where it just blends. And so again, I know that's in the weeds, but I want to share that for those that understand zoning and would have that question. This is a way for, this actually came up last night on our accelerator call, and we were talking about this exact thing. So this is very relevant, very timely. This is something that one of our students is dealing with in real time today, figuring out how to have the second floor drawn in such a way where it's going to conform, because the first floor is grandfathered in. She's going to add significant square footage above, but she may have to create this small shift like you see here. So this is the stuff that that'll differentiate your projects from others. Others might look at a project and just see that the setbacks are not conforming and just walk away. Not us. We know to look and go that one step further. So here it is happening, right? Here's the entire thing coming to life. The original subject property. Look here. And so if you guys can see my cursor, depending on the size of the screen you're working with, you may see that small indentation of the second floor up in the top right corner, right? So let me know if you see that. For those of you that are watching live in real time, drop a comment. Let me know that you see that where the cursor is. And see, it's just so, it's just so small. John, yeah, thanks guys. John, Joe, you guys see that? Alice, you see that? So this is what we're talking about. And here it is drawn. Again, bottom left, you could see that it's just shifted in, and here it is built. Right? So that's it. That's the whole thing going full circle. And here's how the house was ultimately finished inside. I'll quickly jump back. I want to show you one last thing. And so I alluded to the fact that we had comps in the 1.3 range, not too far away. So new construction was going up at 1.3. And we said, let's compete. We're not going to build new construction. Clearly, we're going up over existing, but why don't we push? Let's see if we can get close to that 1.3 number for ours. And so what you see here is us pushing 1.2 for this project. That's significantly higher than that 995 ARV appraisal because we added more square footage. So, and again, like I said earlier, we had to go and raise a little bit more money to do that, but you can tell 995 to 1195, that's 200,000 additional dollars we were able to get out of this house by adding a little bit of extra square footage to the rear. Here's how we finished inside. Double island. Here's that addition I was talking about. The kitchen and the master bedroom is where we actually put that addition, like that additional square footage that we went and grabbed that pushed us from 995 to 1195. It was here in this kitchen, and it was here in this master suite. So the two photos up top. And so here's the HUD on the buy side and the HUD on the sell side. So this is great. Let me just quickly answer this question from Jose, and then we'll keep moving forward. From acquisition as a wholesaler for Gabe for their buy box, what advice to the wholesaler to get zoning book for the union example before presenting? So Jose, if I understand the question right, what's important from a wholesale standpoint is, and often we don't expect that that'll be the case, right? Like when a wholesaler brings us a deal and they are presenting it in such a way that, hey, this is a cosmetic rehab, or if you want to go for the stretch, the forced appreciation model, this could be an add a level, or this could be a tear down, right? It's rare you'll find a wholesaler that's going to model it multiple ways and present it to you. I think as the investor, it's always incumbent on you or us to go and do our own due diligence. And so if someone is wholesaling me a property in a market that I'm really active in, I'll already know the zoning really, really well. I may already have a relationship with the zoning official or the building department. And so when they say that something is possible, I'll know right away whether it is or isn't. Should they know for sure that something's possible before they send it out? I think so. But do they often? No. Most are stretching. They're thinking, hey, I know this works as a cosmetic. I think it could be that much more as an ad level or even that much more as a teardown. And so they structure their email and their offer and their presentation in such a way that's suggestive that all those things are possible. And that's not always the case. So, and I don't fault them for that, right? Like, I know that it's incumbent on us to do the due diligence and to confirm whether or not it's possible to build what we think what we want to build there. So hopefully that clarifies. But to Jose's point, like, it's never a bad idea to know that, right? As a wholesaler, as a fix and flip investor, like, just even as like an attorney or an agent or an architect clearly knows that's what they do for a living, but like, knowing this stuff, having a good handle on this stuff is never a bad idea. It's always, frankly, a good idea. And so let's just quickly look at the HUD. And so I want you guys to see the real numbers, right? So we talked about the 460. I've highlighted it here. We've talked about what I brought to close. I wasn't far off. I said about 130. We actually brought 126 to close. So that 126 was all borrowed private money, right? And here's the sell side HUD. And we sold at 1, 2, 3, 4, 5, 6, 7.89. Remember, we were listed at 1,195. We sold at above that, which is great. We happened to sell to a family that really liked to play with numbers. So their offer was 1, 2, 3, 4, 5, 6, 7.89, which is great. We don't. And then here is our cash to seller at close, right? So you guys are seeing this entire deal from start to finish. And just remember that this cash at close to the seller is inclusive of the money that had to go back to the lender, right? Back to the private money lender. The private money lender was not paid on the HUD. So when you see 441, we don't walk away with 441. We walk away with 441 less the cash that the private money lender sent in and the interest that they were owed. Time from start to finish. The dates are on these HUDs. It's a year, if I remember right. Settled April 8th of 2016, June of 2017, a little over a year. I would say those first like month or two were spent getting plans drawn, getting submissions in, and getting plans approved. But again, like, this is a $250,000 net profit rehab in a year, right? Like, you're not doing that with cosmetic rehabs. And so my then question to you, the challenge for you guys is there one of these hiding in plain sight in your market, right? Are you looking at and kind of just driving by your version of this? And again, it's not about what it looks like now. It's about what you can create with what's there. I want you guys to take the blinders off and just be mindful, like, hey, I'm not in the market for like a cosmetic rehab on a cape. I'm in the market for the colonial that I can create out of this like base property. I'll jump out of the screen share and we can field a few more questions if there are any. But again, and I know that was really quick. And each one of those documents we could have spent 5 or 10 minutes on, poured through, and then fielded questions on each one of those. We just frankly don't have time to do it at that level, right? Like, but hopefully this paints a picture for you guys. You've got this kind of like arc in your mind's eye now. Here's how it goes from start to finish. And now how can I identify one of these on the front end that I can make a strong offer on, knowing what I'm going to create on the back end? Alice, how many do you have going this year in your market? We're doing 5 right now. I'm doing a few alongside students. In our accelerator program, we've probably got over a dozen active projects in our market alone. Don't look at it now, but what can it become? Yeah, Jose, awesome, man. And I know you see a lot of, and so I know a little bit about Jose and what he does, and I know that he sees a lot of opportunities, right? Like the example that I shared with you guys yesterday that we discussed on our accelerator call, the agent, she happens to be an agent. Our student is also an agent, and as such gets a lot of visibility, right? Her finger is on the pulse of the market, they often say. And so she's seeing a lot of stuff. What's the only thing that's changed since she's joined the program is that like the blinders are off now. And now rather than seeing everything as a listing, she sees it as a potential flip opportunity where she can force appreciation and buy the deal herself, do the deal herself, rather than selling the deal to another investor or to a retail buyer who's going to hire a GC to do the renovation. That's what we're ultimately looking to do here with you guys, is just kind of help you reorient like your frame around these opportunities. So when you see them, you say, hey, wait, like there's a six-figure flip here, right? This isn't just a commission on a sale if you're an agent, or this isn't just some house up the street that needs a lot of love that somebody's going to sell and, you know, someone's going to just flip or do a cosmetic rehab, or a retail buyer is going to come in and renovate. Like, no, this is the deal that like changes things for you, right? Like it's a $250,000 deal. This is the deal that like creates a massive shift in your life, right? A 100K deal is already that for most people, but a 250K deal, like that's going to change a lot of people's lives, right? And so if that's if that's you, encouraging you to be mindful of this and be looking for these deals, like these deals are hiding in plain sight. So anyway, I don't want to beat that horse to death. You guys have heard me say this so many times. I know this was a short one and I went through this quickly, but again, we've done this presentation in the past, right? We're kind of revisiting this because we're getting a lot of questions about like, what does a deal look like? How can I find these? And then we worry about the funding piece. I know we had a lot of questions around the funding of these deals, but the private money mastery, like that mini course, that program, everything that we have there is designed in such a way that like, if you lock up a six-figure flip, I promise you will source the funding to do it. Like we have folks inside of our mastermind that are lending to people to do deals just like this because the deals are just so good. They're so safe. So again, I know this was a quick one. Thank you guys for being with us today. If you haven't talked to the team and you're interested in talking to the team and finding out more about what we're doing inside of the accelerator, get a hold of Evan. I know that all of you by now know him. And so connect with him. And yeah, look forward to doing another one of these with you guys next week. Any other questions, drop them here below. If you watch this later, we go back and check these comments. So if there's questions that didn't get answered here, drop them there and I'm happy to go back in and answer them. All right, guys, awesome. Super cool having you guys here. And I liked it was a smaller, intimate group today and so much engagement in the chat. I really appreciate that. And that's why we show up and that's why I do these. So, all right, guys, have a great rest of your week. Kick ass. Model deals, right offers, buy houses.